A lot of people try to give an explanation ex post facto of the stock market. So they go, oh, this happened, it's because of this. Now, when I was doing my show on Bloomberg, I'd see that all the time. I'd see a headline which said, oh, this stock has gone up because the market reacted like this. And then by the end of the day, the stock had fallen. They'd say, oh, the stock had gone down because the market reacted negatively. Well, wait a minute. How can the market have done both things simultaneously at different times of the day? And of course, it could technically. But in actual fact, let me be absolutely clear. Most of us insiders have no idea, nor do we care why prices are moving in a particular direction in the short term. We're using algorithms to just follow those trends. Okay? That is the only explanation we can come to when I'm on the BBC talking about oil prices or HSBC or whatever else, and you can see some of those interviews in the links in the bio, then it's really my algorithms that we're talking about. We're not talking about, well, I see from a macroeconomic perspective, supply and demand imbalances, blah, blah, blah. That might operate over the longer term. It doesn't operate on a day-to-day basis. That's why we're not trying to sound too clever in the short term. There are bizarre stock moves, and they do leave our head scratching, only if we try to understand them. We're not trying to understand them. We know there's irrationality in the market. We know there's algorithms, and we know it's those algorithms which are actually moving things, not humans or some kind of omniscient being which can see into the future and knows exactly the precise supply and demand and prices accordingly. Nope, that's not what happens. Algos.